In our initial conversations with you, and on an ongoing basis, the Greenard Group will discuss your cash flow needs for the next 12 to 24 months, if any. As portfolio managers, it's important that we know what your cash flow needs are so that money can be kept aside specifically for this purpose. Liquidity is the key component to look at when determining the appropriate level of cash. Time horizon is also another component which will determine whether to have funds set aside in cash. We never want to be forced to sell equities at the wrong point in the markets when they've declined in the short term to fulfill cash flow needs. This is why communicating with us regarding your cash flow needs is so important, as it enables us to raise cash at the right point in the market cycle. The Greenard Group utilizes investment savings accounts for you, which on the Holdings Detail Report is classified as cash equivalents. Cash equivalents from an accounting standpoint are fully guaranteed, have a posted interest rate, and have a maturity within 12 months. We utilize cash equivalents for cash flow, either periodic, lump sum, or for investment opportunities. We recommend holding 1 to 2 years of cash flow in an investment savings account, which has daily liquidity. Interest rates offered on investment savings accounts are floating with the benchmark rates in Canada. If the benchmark rates in Canada rise, then the rates on the investment savings accounts will rise, and vice versa. For cash flow needs less than 12 months, we'll use an investment savings account. For cash flow needs between 12 to 24 months, we will assess the current interest rate environment to determine if a cash equivalent option is the best or whether a fixed income alternative is better. For periodic cash flow needs, we set up a systematic withdrawal plan. Systematic withdrawals are set up from either a non-registered or registered account and are sent to your bank account on the last business day of every month. For systematic withdrawals, we utilize National Trust Investment Savings Account. The symbol for this is DYN3054. As an example, let's say you require $5,000 per month from your non-registered account. At a minimum, we will put $5,000 times 12 months into National Trust Investment Savings Account, which would equal $60,000. This amount would be earmarked for your monthly cash flow needs and would be replenished as time goes on. For lump sum cash flow needs, we utilize the Bank of Nova Scotia Trust Tiered Investment Savings Account. The symbol for this is DYN5000. Cash is earmarked for you that you'd like us to hold on to for emergency funds or to have funds set aside for a larger purchase like a vehicle, recreational vehicle, boat, home renovations, travel plans, or to assist family members in the future. Cash held for investment opportunities is earmarked in Bank of Nova Scotia Tiered Investment Savings Account. The symbol for this is DYN6000. When we see an opportunity to deploy cash into equities at attractive levels, or if we have been tactically investing money into the market over a set period, then we'll utilize cash earmarked in DYN6000. As portfolio managers, the Greenard Group has the discretion to deviate from your strategic asset mix for tactical reasons. This is outlined in your investment policy statement. Within the investment policy statement, we have guidelines regarding how much cash we can tactically hold at a given time. These guidelines are 0 to 40%. The most common reason that we'll have a higher level of cash is when we begin working with you and you may want to invest a large cash balance over a period of time, such as a few months. If you like this video, you can discover more videos in the Greenard Exchange section of our website. You can also read both past and current articles in the Greenard Index section. Thanks for listening.